There's only one reason to buy assets like gold or Bitcoin, to buy assets that are not generating regular cash flow. And that one reason is that we anticipate that the price at some point will be higher compared to when we have bought. Now, the super long-term investors, they buy into gold or Bitcoin because they believe that the monetary base is expanding over time, that more money is getting printed, and that because of that, the price is going up. Thus, we protect ourselves against that monetary expansion. For America, right, for US M2, that monetary expansion tends to be over the decades roughly 6.5% per annum. So if you don't make more than 6.5% per annum nominally on your investment, then you tend to fall behind in the grand scheme of things. So buying gold or buying Bitcoin should at least be able to cover that, right? Because Bitcoin and gold doesn't really expand that quickly. Monetary debasement expands much faster, and so we should be able to protect ourselves from this. The issue is, besides those very long-term investors, there are very different reasons as well to buy and potentially sell an asset. And the reason why we see these massive swings in the Bitcoin price is not because we believe that the monetary expansion will accelerate or slow down. It's mainly narrative driven. So why did Bitcoin bottom at the end of 2022 at around 16K? Why did people buy at that time? I believe there were three main drivers. The first driver was the anticipation of a Bitcoin ETF launch, right? There was not yet a Bitcoin ETF. It wasn't yet launched. There was only the Grayscale Bitcoin Trust. People thought that at some point a Bitcoin ETF gets approved. This in the end happened. The anticipation of that approval really drove up the price. So it wasn't necessarily only the purchases by the ETFs itself. It was simply just people that speculated on that future demand to come in once those instruments are free for trading, are open for trading. And because of that anticipation, because some people thought this demand will come, the demand was already pushed to the present. So the price already rose earlier before the approval, right? Buy the rumor, sell the news. The second reason was the Bitcoin halving, right? The very closely upcoming Bitcoin halving, where the newly issued supply of Bitcoin gets cut in half. That happens every 4 years, and it just recently happened. So usually, right, after the halving, the price tends to rally massively. But this time, again, people anticipated the halving, looked at this much earlier, and the price already reached an all-time high prior to the halving. This is not what happened ever before. Never before did we see an all-time high prior to the halving. This time we did. So again, the market becomes more efficient, right? It's forward-looking. The third reason why I believe the price bottomed at the time and why a lot of people bought in, pushing up the price in the end, was that the Bitcoin price, relatively speaking, was very low, right? We were at 69K all-time high. We were then at 16K. We had a drop comparable to prior bear markets. We had a drop below the realized price. So the average cost basis of the overall market was higher than the current price. The market in aggregate was in losses. And because of that, there wasn't that much sell pressure, right? When the market in aggregate is in losses and not in gains, then nobody can take profit. Or at least on average, people aren't taking profit, right? People simply just wait out for the long-term tokenomics to play out. Because again, long-term Bitcoin inflates not as quickly as fiat. So if you simply just wait it out, at some point a new rally will come. Thus, the sell pressure is much lower whenever the price of Bitcoin is below the realized price. So there are those three drivers: anticipation of an ETF, Bitcoin halving, and the price below the realized price. Now, the market is always forward-looking. So let's do that. Let's talk about those three prior drivers. So the Bitcoin ETF. Unfortunately, we don't see any more inflows into the Bitcoin ETFs for several weeks now. There's actually rather the tendency that the balance that's been held by the Bitcoin ETF tends to shrink. So there are outflows depressing the price of Bitcoin. At the beginning, there was a lot of adoption. Now we don't see that anymore. Now we don't see people buying the Bitcoin ETF that much. So there used to be the anticipation that the Bitcoin ETF will scoop up more and more supply of Bitcoin. This happened at the beginning. It's not happening anymore. So the Bitcoin ETF is not a reason to buy anymore. It's rather a reason to sell, given that there's currently outflows. Second reason, the Bitcoin halving. Will we see a continued rally because of the Bitcoin halving? There's two reasons against this potentially. The first reason is we've already seen the rally before the halving, so there was already the anticipation. The second reason is that this time the halving isn't that important, relatively speaking, anymore, right? The supply got cut in half. But the annual supply, the mining supply, was already very low. It was at 1.7% and then got cut in half. So it's less than a percentage point of annual supply that the supply-demand curve now shifts. That in itself shouldn't really impact the price that much. I'm estimating that on average, 2% of all of Bitcoin supply already gets lost every year. So there's already more Bitcoin that's getting lost than Bitcoin that's getting mined pre-halving. And now we simply just have a slight change in the newly issued supply. But really, all of that price increase would be 100% psychological. It would not be 100% because of the supply contraction. Otherwise, Ethereum would be outperforming Bitcoin massively since the change from proof of work to proof of stake, right? Where also the tokenomics change, where now Ethereum has a shrinking supply even. Ethereum isn't outperforming Bitcoin. At least it wasn't outperforming since the merge. It underperformed quite a bit, more than 50%, I believe. The third reason, the realized price, unfortunately, is also a reason to rather sell. The realized price is a bit under 30,000 right now. So that's the average cost basis of the entire market. Once the price of Bitcoin falls below 30,000, then the market in aggregate will be in losses again, and then it might make sense to buy very, very heavily again. Right now, the market is more than 2x in profit. Thus, some people consider taking some of that profit, right? Rebalance their portfolio. Maybe they started out with 10% of their portfolio in Bitcoin. Now it's suddenly 20% of their portfolio in Bitcoin. Maybe they aren't that risk tolerant anymore. Maybe they think the current momentum isn't that positive. Who knows? But there's rather profit taking. Whenever we are above the realized price, then there is a lot of buying pressure potentially. So this is how we have to be forward looking, right? What could be the reason why people now buy in? I think there's only one, maybe if you're generous, two reasons. The first reason is that historically, when we hit an all-time high after a prolonged bear market, that then usually we get into price discovery mode. Price discovery mode simply means we have to find out what's now the fair value. Is it really just the prior all-time high, or are we going to go much higher? And in the past, usually once we hit the all-time high after a prolonged bear market, we tended to rally for a pretty long time, made multiple X returns. So that would be one potential reason, right? If we don't see this now, if we actually see a triple top almost, right? If we topped out at first, I believe 64K, then 68K, and now at 72, 73K, right? When we see very close all-time highs next to each other, like a triple top, that would be something very, very special. But it's not impossible. But because it's special, people might not believe in this happening. Thus, some people might be buying in anticipation that we're now in price discovery mode. The second reason is that the trend is your friend. So when you run back tests, when you run simulations of buying and selling Bitcoin with all of its historical data, then we can find out that Bitcoin does move in trends. So people always say that prior performance doesn't really have any impact on future performance. But when you actually run the numbers, right, there's obviously no guarantee when something went up yesterday that it will go up tomorrow again. But when you actually run the statistics, then especially for crypto, one can say that crypto runs in trends. In other words, when crypto tended to go up in the last week, it's more likely to go up in the next week as well than going down. So there is a higher likelihood for a trend to continue than to turn around. And the way I backtested this was with moving averages. So I simply made the simulation. Whenever the current price is above the moving average, then we tend to be rising. Whenever the price is below the moving average, then we tend to be selling. If you simply just follow the trend based on moving averages, all kinds of durations tend to work. All kinds of durations tend to outperform just buying and holding. So it does make sense to follow trends. And currently, a lot of moving averages still are bullish, even though we have seen a bit of a correction. This video is sponsored by the premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the premium membership. Feel free to check it out. I'm not sure how much those reasons actually fly compared to the three reasons we had before, right? Before we had really strong narratives. ETF, halving, below the realized price after a massive, massive crash. Now we only have current momentum and just now in price discovery mode. It's probably not that strong of a narrative. It's probably not going to drive that many people into buying Bitcoin now as it's perceived as being relatively high. And so we simply have to be realistic here, right? We have to have a proper allocation to crypto. if we are currently not as bullish compared to when Bitcoin was at 16K, then we should not have more allocation to crypto, right? If we were, let's say, when Bitcoin was at 20K with 10% of our portfolio in crypto, and now Bitcoin is much, much higher, then we shouldn't have a higher allocation to Bitcoin at this point, right? Because now probably the narrative isn't as strong as it used to be back in the past. So we should actually have even a lower allocation, right? Whenever we tend to be cheap, we should have an above average allocation. Whenever we tend to be high, we should have a below average allocation. Of course, nobody knows exactly where things are going, but when there's a lot of meme coin trading going on, when some blockchains get congested again, when gas prices are high, then probably we are not in a bear market, right? And probably we tend to be rather high. Thus, we should probably rather have an allocation that's below average. So let's just simply try to navigate the markets like this, right? There are trends, there are waves. It doesn't make sense to have a diversified portfolio. Nobody can say for sure where things are going. But if we are underexposed whenever we are very hot, and we are overexposed whenever nobody looks at an asset, and we simply just shift our assets around that way, right? If we simply just now move more, say, into stocks and into bonds, and whenever Bitcoin crashes, we move this back into crypto again, then we don't just have the benefit of diversification, as in that the portfolio doesn't move up and down in total that much because we have all those different assets. We also have the benefit of actually being able to buy dips very effectively, because we don't just buy the dips with our regular cash flow, we actually buy the dips with all the wealth that we have in all the other assets, because the other assets are comparatively high to whatever crashed. And when we believe in the crashed asset long term, that it will recover at some point, then it does make sense to pick up the pieces at that point, even though it's very hard, right? It's always hard to buy a crashing asset. But if you think that Bitcoin will survive over the next 5 to 10 years, then why not buy a crash in case it happens, right? But currently, obviously, we are not yet there. Currently, we are still above the realized price. It's not yet time to go super hyper risk on. It might make sense to bet still on the positive momentum, but definitely not to the degree compared to what we should have been exposed to when Bitcoin was just at 16, 17K. If it's the first time here, feel free to subscribe. I publish this regularly. Like would be very much appreciated as well. Helps the channel grow. And feel free to join our Telegram. There's a Telegram link down below. Looking forward to chatting with you. Join over there. See you there. Cheers.